Welcome to another exciting episode of Financial Insights in Minutes. Today, we summarize the top real estate market videos to keep you in the loop. Let's jump into what's happening in the real estate space today. From soaring insurance rates in Florida to Opendoor's financial woes, we've got it all covered. And let's not forget the potential impact of upcoming rate cuts.
Stay tuned for expert opinions that highlight both rewards and risks in this climate.
We'll be diving into critical discussions in just a moment. Ready to explore? Reventure Consulting reveals how a homeowner's insurance crisis is reshaping Florida's real estate. Real Estate Mindset dives into Opendoor's alarming financial troubles as the housing market buckles. Ken McElroy discusses the implications of possible rate cuts from the Fed for the economy and housing market. Jason Walter analyzes rising inventory and dropping prices. Could we be shifting toward a buyer's market? Kristina Smallhorn explores how falling home prices and interest rates present new opportunities for buyers. BiggerPockets features an inspiring transformation story of turning a small teacher's salary into financial freedom through rentals. Ryan Scribner shares 5 powerful steps to massively increase productivity in your day-to-day life. Real Estate Mindset reveals shocking foreclosure data and the rising tide of homeowner distress. Welcome to Reventure Consulting. Today, we're navigating through the tumultuous waters of Florida's homeowners insurance crisis, where rates have skyrocketed.
Absolutely. Nick Gurley, our knowledgeable guest, shares the alarming reality where insurance costs are forcing homeowners to sell, a real navigation challenge.
So, what's at the heart of this crisis, and why are so many homeowners in trouble?
The main thesis discusses how insurance rates are not just doubling or tripling, but in some neighborhoods, they're quadrupling, making housing unaffordable and leading to increased sales.
What's driving these insane insurance rates, and how are homeowners coping?
Most homeowners now pay over $11,000 for insurance, a steep rise from just $4,000 5 years ago. That's a wake-up call for anyone considering buying here.
And the floods, how significant is that risk?
Hurricane Idalia saw nearly half of the homes in Shore Acres underwater. With increased flooding from rising sea levels, it's becoming a dangerous gamble for homeowners.
Let's talk numbers. How's the market reacting to all this?
Inventory in Shore Acres has shot up 400%. It's the highest it's been in 10 years, an indicator of a struggling market.
Time for predictions. What does the future hold, especially for market prices?
Prices are likely headed downward, which could alleviate some insurance pressures. Tampa in particular is predicted to face significant declines, indicating a broader market downturn.
What should potential buyers keep in mind?
Buyers must recognize the risks of investing in high flood zones. Skipping flood-prone areas is more than a suggestion. It's crucial.
To wrap things up, what are the takeaways from this discussion?
Awareness is vital. Homebuyers and investors must strategize carefully, taking into account insurance costs, flooding risks, and broader market trends to navigate this volatile landscape.
Any final words for our audience?
Before diving in, assess if a property is in a flood zone and understand the insurance costs. It's the best way to avoid being left high and dry.
Welcome back to Real Estate Mindset on YouTube. Today, we're diving deep into a topic that's got the market buzzing. Opendoor's financial troubles amid a buckling housing market. Grab your life jackets, folks.
Absolutely. We're examining how Opendoor is navigating rough waters and what it reveals about the broader housing market. This is going to be a wild ride.
What's the main thesis here regarding Opendoor?
The core idea is that Opendoor is in serious financial trouble due to the housing market decline, which is reflected in their stock performance and business strategies. The market is buckling, and it's hitting home flipping companies hard.
Let's drill down into the key points. What's happening financially with Opendoor?
First up, they've been slapped with a $62 million fine. Their stock is down over 64% this year, and down 37% just last month. Not a good look. And Q2 2023 revealed their revenue dropped by 23.5%. Sounds like a sinking ship.
Now, what's the scoop on the housing market's condition?
Oh, it's a mess. Opendoor indicates that home price appreciation is now in the negative. We've seen more delistings than in the past 10 years, and generally, market values are decreasing. Yikes!
What risks are looming on the horizon?
The potential collapse of regional banks is alarming. When homeowners can't sell, distress spreads, leading to foreclosures. Borrowers with costs skyrocketing are caught in a bind.
Now, what are some predictions from today's discussion?
Experts suggest that contagion effects could hit the market by 2025 or 2026, leading to a significant downturn.
And what about the sustainability of the housing market itself?
It's not looking good. Rising taxes and homelessness are on the rise, adding to the pressures faced by residents. How long can this go on?
So, what can we take away from today's deep dive?
It's clear there's an urgent need for reforms in housing practices and financial regulations to stabilize this precarious market. If not, we may be in for a rough ride.
Welcome to the channel. Today we're tackling a hot topic that's sure to ruffle a few feathers. Rate cuts, inflation, employment stats, who stands to gain, and who's about to take a hit. It's time to navigate through these waters.
Right? Ken discusses the implications of the Fed possibly cutting rates. With over 25 years in real estate investing, he's seen the highs and lows of the market. His insights will certainly help us understand this complicated situation.
So, what's the crux of Ken's discussion? What's at the heart of these rate cuts?
The main thesis is that the anticipated rate cuts by the Fed aren't just small changes. They're pivotal, influencing job stability, inflation rates, and overall economic health. Ken emphasizes that the effects will ripple through different sectors, creating both winners and losers.
Let's break down those key points. What's the scoop on these anticipated rate cuts?
Ken predicts the Fed will lower rates by a quarter point, projecting stability in the job market. This isn't just a minor adjustment, it's a clear message to businesses to hold on to employees amid rising unemployment numbers.
And what about the jobless claims? What's the latest update there?
Jobless claims have surged to nearly 1.9 million, the highest level since 2021. Ken highlights that more people are on unemployment than actively seeking jobs, a worrying sign for the economy.
Interesting. Who stands to benefit from these cuts?
Consumers holding variable debt, such as credit card users, will enjoy lower interest rates. Retailers could also see a surge in sales as borrowing becomes cheaper, stimulating consumer spending.
Now, every silver lining has a cloud. Who might find themselves on the losing end?
Savers with cash will get hit as interest rates drop on savings accounts. Plus, prospective homebuyers could face increasing prices as demand rises when rates decrease.
What about the predictions surrounding construction?
Ken anticipates that lowering rates will stimulate construction projects, leading to more affordable housing options. It's a potential silver lining for the housing market.
And what about inflation? Any predictions there?
Yes, Ken warns that rate cuts could lead to rising inflation pressures, particularly affecting those with fixed-rate debts. It's a double-edged sword that could complicate the economic recovery.
Wrapping up, what are the big takeaways?
Ken concludes that the potential rate cuts will reshape the economic landscape. Both consumers and businesses must navigate these changes wisely to maximize benefits and minimize risks. These shifts could create a new era in economic dynamics.
Any final thoughts on what to watch for?
Keep an eye on how these anticipated rate cuts will unfold, as they may have profound implications for various sectors. It's definitely a topic worth staying informed about.
Welcome back to Jason Walters' YouTube channel. Today, we're charting the latest twists and turns in the U.S. housing market based on insights from Realtor.com.
That's right. And Jason has an extensive background in analyzing real estate trends, so buckle up for a deep dive into the data.
What's the main theme of today's analysis?
The core thesis highlights that inventory levels are on the rise, with asking prices dropping year over year, signaling a potential buyer's market.
Let's navigate through the key points. First up, what's happening with the asking prices?
Asking prices decreased by 7% over the past year. This marks the second consecutive week we've seen this drop, largely due to rising inventory levels.
And what about inventory?
Inventory levels have surged by 35.9% year over year, with over 684,000 homes currently on the market.
Price reductions seem noteworthy, would you agree?
Absolutely. There's been a 47.5% increase in price reductions year over year, with nearly 40% of homes experiencing price drops. That's significant.
What's the average time on the market looking like?
On average, homes are taking 5 days longer to sell than last year, marking 13 weeks of this trend. It's clear homes are lingering on the market.
What are Jason's predictions for the market?
Jason anticipates a shift towards a buyer's market as inventory levels rise. This could lead to more gradual adjustments in home prices.
In summary, what's the overarching message?
The housing market dynamics are shifting, with increased inventory and lower asking prices paving the way for potential buyers. It's a changing tide.
Welcome viewers to today's discussion on home prices and interest rates.
We'll delve into the latest trends indicating a drop in home prices and interest rates, which is great news for buyers.
So what's the central theme of Kristina's latest live stream?
The main thesis reveals that home prices are falling significantly across many areas, with buyers benefiting as interest rates decrease.
Let's break down those key points, starting with the current market dynamics.
Indeed, home prices are slashed at their fastest pace in 2 years. In July, the percentage of listings with cuts surged from 3.4% to 18.9%.
And what about interest rates? What's the latest?
The average 30-year fixed mortgage dropped to 6.47%. Lower rates are making homes more affordable.
What can you tell us about regional differences in the housing market?
Tampa, Florida, has the highest rate of price reductions. However, cities like Charlotte and Phoenix are experiencing struggles.
Looking ahead, what predictions are on the table?
There's a chance for further price cuts in regions with rapid new construction. Stagnant wages could also hinder purchasing power.
Any final thoughts? What should buyers do?
This is a crucial moment for buyers. With decreasing prices and rates, now is the time to explore homeownership opportunities.
What's the best approach moving forward?
Buyers should keep a close watch on economic indicators as they navigate this shifting market landscape.
Welcome to the BiggerPockets podcast. Today, we're diving into an inspiring story of transformation. Corby Go went from earning just $17,000 a year as a teacher to discovering financial freedom through real estate.
That's right. Corby has been actively investing for decades, adapting to various market cycles and ultimately building multiple successful businesses in the real estate sector. He really knows how to navigate these waters.
So, what's the central message from Corby's journey?
Corby emphasizes that, contrary to popular belief, you can still make deals work and generate cash flow in higher-priced markets. His story illustrates how sticking to the fundamentals of real estate investment can lead to success.
Let's unpack some of those key takeaways. First up, Corby has continually adapted his investment strategies to fit ever-changing market conditions.
Absolutely. He believes sticking to the solid fundamentals of real estate is more effective than relying on the latest trendy investment strategies.
Next, let's talk about property management. Corby runs a successful management company serving hundreds of properties. What's the secret sauce?
By diligently tracking data such as average rents and turnover rates, Corby empowers clients to make informed investment decisions.
Corby certainly made it clear that action is key. He emphasizes the importance of taking immediate steps towards investing.
That's right. For first-time investors, he strongly advocates for house hacking as an excellent way to ease into the market.
What about financial freedom? How does Corby achieve it?
Corby proves that you don't need a massive portfolio to gain financial independence. Even owning 20 units can lead to a comfortable living.
What does Corby foresee for the future?
He predicts that the Boise real estate market will keep appreciating, and sticking to sound fundamentals will prove essential for future investors.
In closing, what should investors take away from Corby's story?
Opportunities in real estate can be found even in challenging markets. All it takes is a willingness to learn, adapt, and take action. Investors should leverage their knowledge, remain informed, and be proactive in pursuing their goals.
Welcome to Ryan Scribner's YouTube channel. Ready to unleash your ultimate productivity? Today's guide dives into 5 simple steps to 10x your productivity and transform your daily routine.
Indeed. Ryan shares super practical advice for overcoming common productivity blockers. With years of experience as an entrepreneur, he knows just what it takes to level up your productivity game.
What's the central theme that drives Ryan's message?
The core thesis is straightforward. To maximize productivity, one must eliminate distractions and adopt structured habits. It's about reclaiming your focus in an age filled with interruptions.
Let's tackle the first key point, eliminating distractions. What's the scoop?
Ryan reveals that attention is the new currency. With apps deliberately crafted to capture our focus, these distractions can prevent meaningful work and hinder productivity.
Tracking time sounds simple, but how impactful can it be?
Tracking time can transform how you view productivity. Many people believe they're working 40 hours a week, but often it's only 20 to 30. This hard data clarifies where time is being lost.
What's this eat the frog trick all about?
Eating the frog means tackling the hardest task first thing. This not only boosts productivity, but also flips procrastination upside down since you're conquering the tough stuff first.
Shifting toward mindset, what can you tell us?
Ryan emphasizes that focusing on the process rather than just outcomes makes achieving your goals feel more attainable. Incremental improvements are key.
What predictions does Ryan make about these productivity methods?
By eliminating distractions and following these structured habits, he predicts a significant boost in productivity. Incremental improvements may seem small, but they compound massively over time.
To wrap things up, what's the big takeaway?
Ryan stresses the importance of focusing on eliminating distractions, meticulously tracking time, and nurturing a process-driven mentality to elevate productivity. Following these steps can truly transform your work life.
Welcome back to Real Estate Mindset. Today's topic dives into the murky waters of foreclosures as we reveal disturbing data that could change everything.
Right, the latest revelations indicate that nearly 7 million homeowners might face eviction. Buckle up as we dissect this shocking situation with our expert Melody.
So, what's the core message from this breakdown?
The thesis reveals that many believe delinquency rates rest around 3%. But the truth is far more alarming. With millions facing foreclosure, we must reconsider our understanding of the housing market today.
Dive into the key highlights. What stands out to you?
First off, Melody emphasizes the staggering fact that approximately 7 million homeowners are in danger of losing their homes. Meanwhile, current statistics indicate delinquency rates are nearly 5%, a grim reality far from the popular belief.
What about the role of lending practices?
Lending standards have loosened dangerously, with FHA loans currently carrying more than a 12% delinquency rate. Many new loans are issued to borrowers with scores as low as 580, raising serious concerns.
And how are economic factors contributing to this?
We're witnessing income reductions becoming a substantial factor behind delinquencies, with marital difficulties now significantly increasing among those in distress, showcasing the human cost of this crisis.
What can we expect moving forward?
The situation is anticipated to deteriorate further, with foreclosures likely to swell. The tightening of lending standards might lead to more scrutiny of new mortgage applications.
Are there wider economic implications?
Yes. A spike in foreclosures can destabilize the housing market and potentially trigger a wider economic downturn, as we saw in previous crises.
In light of all this, what's the main takeaway?
The current stats reflect a concerning reality that needs urgent attention. Ignoring these signs could lead to repeating the mistakes of past crises. The call for more transparent lending practices and regulation is clearer than ever.
As we wrap up, it's apparent that Nick highlighted dire situations in Florida's insurance environment, forcing homeowners to reevaluate.
Indeed, the alarms sounded around Opendoor's financial struggles reveal underlying vulnerabilities in the housing sector.
While Ken's insights on possible rate cuts could uplift some sectors, the risk of inflation looms large.
Every perspective today reinforces how critical understanding these trends is for investors.
Thanks for watching Financial Insights in Minutes for August 13th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.